Teaching Tax Flow podcast, where the goal is to empower and educate you to legally and ethically minimize taxes paid over your lifetime.
Good day, everybody, and welcome back to the Teaching Tax Flow podcast. We are on to episode 38 today. We're going to jump into some IRS War Stories. So we couldn't think of a better person to bring back for another episode of this show than our friend, which you will hear him shortly, or look in the show notes. Name might look familiar to you. But basically, I'm going to moderate this great conversation to the best of my abilities between this gentleman and Chris Picciaro, obviously my partner in crime here in this podcast. The gentleman that's joining us really is, I would say he is the best person maybe in our Rolodex, quote unquote, to dive into with anything IRS. He's in the trenches with these guys all the time, so guys and gals. But before we do that, let's take a moment and thank those that allow us to be here. Besides you, the listener, of course. We thank you for joining us as always. Let's thank our sponsor.
This podcast is brought to you by Legacy Lock. If you are new to estate planning or simply need to review your current plan, Legacy Lock makes it as easy as pie. Legacy Lock is a unique platform that enables you to easily complete your attorney-drafted documents conveniently from the comfort of your home or office. Your first step to this peace of mind is simply visiting teachingtaxflow.com/legacy.
Hey, everybody. Welcome back to Teaching Tax Flow, the podcast. You may, if you read the show notes, read the title, see the face on the picture, you may recognize this guy from a great episode we did a little bit earlier on about the IRS. Was it Love Letters from Darth Vader, Chris?
Yeah.
Was that the title of that one?
Yeah.
So we got Andrew Poulos back with us today. How's it going, Andrew?
Good, guys. How are you doing? Good to be back.
We are doing fantastic. And this one I love because I can hear from both of you and I can harass both of you at the same time. So this is a great, great show we're going to talk about today. Really focusing in on, I guess I can call them, IRS war stories, or sort of war stories of dealing with the IRS. So we'll dive into it specifically, and I'll actually probably ask both of you for some examples of this, but from a taxpayer perspective, right? So you kind of get into the ring potentially with the IRS, and we'll say getting into the ring with them, but you really don't know what you're getting into, right? So it's intimidating as heck, from a taxpayer perspective. You guys deal with this all the time, so I can now wait to hear some of your stories and really what led into it, and then also a little bit about what you did to get the best possible outcome going into that ring. So let's jump into one. Andrew, let's actually start with you a little bit. What, at the top of your mind, what's probably maybe the craziest, but not the longest one, because we are limited on time here, so we don't have 3 hours to talk about this one, because I'm sure there's a lot of good, funny, hilarious, and sad, effects of this. But what's a good story about one of your dealings with the IRS? Give us maybe a little backstory on it, and then also, what you did throughout the process and how it came out.
Oh, man. That's a great question. I've had so many dealings with the IRS, right? From audits to collections over the years. And you stick in this profession long enough, you're going to get a little bit of everything. But I've had some crazy ones because of the taxpayer and what they had done or didn't do. And then I've got some other ones, man, where just IRS personnel don't do their job and you got to call them out and it gets ugly. So, there's a little bit of everything, but yeah, it's, I've had a situation where the revenue officer got out of control and I called him out on his BS pretty much. And, unbeknownst to me, they got escalated. I had a special agent come pay me a visit to interview me about the situation from TICTA, I hadn't done anything. So I was cool, but it's not, you're talking about intimidating. You open up your very office door and there's a special agent pretty much in jeans and a t-shirt being like, hey, are you so-and-so? And he pulls out his badge and he's like, I'm special agent. I'm like, oh.
Not just an agent, I'm a special agent. Nothing sounds, you got to say it in like a deep voice, like Special Agent Smith from the IRS.
It's unnerving, to say the least. Once he told me what he was there for, I'm like, have a seat, buddy. I was like, because I just knew I hadn't done anything wrong. But, you try to do your job, man, to help your clients and help taxpayers. And most of the time, everything goes fine, right? Dealing with IRS personnel. Every once in a while, you're going to get some, guy or some woman or whoever, we'll just say some person. And then it's just, unresponsive. It gets ugly situation. It's been my only one to that extreme in my, 28 years or whatever. But dude, it was just, situations. You got to figure out how to navigate this stuff. I mean, it's just not easy. There's no playbook. There's no script book, as Chris will tell you, on what we deal with. Everything is unique in a sense.
Yeah. And TIGTA think about it, it's almost like the military police of the IRS. It's the Treasury Inspector General for Tax Administration.
From a taxpayer perspective, I I think it just squinted and cried a little bit inside. That sounds intimidating. It's got a little.
It was intimidating. Yeah, listen. The one thing you learn in our profession as a tax professional, you never want a special agent knocking on your door. Yeah. And first and only time I've gotten one, I'm like, oh, makes your heartbeat skip a beat because, most of the time they would think, this special agent could be paying you a visit because of the case you're handling, and typically that would mean there's potential criminal elements, and, you probably don't want to be involved in that stuff. In this case, it's just pretty much me complaining about, IRS personnel that wasn't doing their job, that was making my life miserable. And in making my life miserable, essentially, my taxpayer was like, hey, man, what's still been going on? You've had this case for freaking 10 months on your desk, and, yada, yada. It was just making me look bad as a professional. And I couldn't get a resolution and, good, bad, or indifferent for my client because I couldn't, I couldn't make the case progress because, the IRS personnel was being non-responsive. And at that, it got to a point, man, where, it's just pissed me off. And I'm like, all right, I just, we got to do something here. And I complained to the manager and wrote a letter, just a nasty letter, a polite, nasty letter. And unbeknownst to me, she did her job, or he did her job, whatever the manager was, and escalated it. And like a year later, I get paid a visit from TIGDA, and I'm like, whoa.
Yeah, I think that no, in taxpayers, you should understand, people in the teaching tax law community, that as tax professionals, we want these issues resolved also. It doesn't do us any good for a case to sit stale. Unfortunately, we're dealing with the federal government, and it can only go so fast as they want it to go. So, Andrew, have you had any situations where maybe the taxpayer, you took over representation for a taxpayer and an initial interview was already conducted and information was disclosed, or that maybe they were a little too free with their answers?
Yeah, Chris, I've had one of those where essentially a client was under audit, came to me, referred the audit hadn't been concluded, but they couldn't come to an agreement. The CPA was pretty much kind of going out into corporate, and so client needed new representation to handle the process from there. It was an unagreed upon audit effectively, and so everything had been disclosed because I started interviewing the client, and it's like, oh yeah, I told the agent this, gave the agent that. I'm like, oh hell, but the audit had been closed. The client came to me to file an appeals case because it was unagreed upon, so they had their appeals rights essentially intact and wanted to file an appeals to try to get a better resolution. But yeah, seldom, that was my only time where I kind of sort of took on a case that already had information had been disclosed, shared or not shared in a sense. And I was limited to what I had to work with at that point because, the government had their file built. Not that there was anything bad. It was just, just little petty stuff as far as expenses, self-employed people, how it is. I mean, it's just some of them, small business owners, not going to have immaculate records most of the time. Very few do, let's just say that.
And even for both of you gentlemen, so really would I be wrong in assuming that the hardest part of your job is information collection?
Yeah, especially if the information doesn't exist, right? So that's challenging. I think it's important to make sure that you're working with a tax professional that's going to represent you properly. I guess my first story would be, I'm a big advocate of the home office deduction.
Mm-hmm.
And this was back before, probably 10 years ago when we lived in the Detroit area, had a client that owned a trucking company, legit home office, beautiful home. And the IRS decided to audit them. And the home office was one of their areas that they were looking at. Now, mind you, this in bonus depreciation, those are the two big, because they purchased, I think, 14 trucks in 1 year. Ooh. And a lot of bonus depreciation, 179. So yeah, and it worked out well for them. So anyway, the auditor's stuck on this home office, and they're like, well, we want to go out to the home. We're like, okay.
Which is very rare, I assume.
Well, let me speak to that, not that Chris can't explain this, or, I don't want to dive into a story just yet, but essentially I always tell clients, like, the minute you take a home office deduction in an exam, in an audit, the IRS has legitimate reason and can come and visit your home and to see that home office, and so I always make clients aware, because in that kind of rare situation like Chris is talking about now, It's just like if the client is not aware prior to, this happening, they're like, well, why the heck does the government want to come to my house? Well, but you're claiming a deduction, right? So the home office, look, I'm all about the home office as well, like Chris, right? So we're on the same link there. But I just want to make sure my clients are aware that if we ever have an exam, be prepared. The government's going to want to come and see that home office.
And take pictures, right? Because by the time you get examined, you might not live in that home anymore.
Exactly.
So we took pictures, we submitted them. That wasn't enough. We had a rookie auditor. And this guy, I'm like, okay, well, I'll meet you out there, right? So I go out there. It was a more of a matter of principle at this point. Home office isn't a big deal, but we took the actual because they had a beautiful home and a higher mortgage than they should have. We don't, whatever. Told the clients politely to evacuate the house. Met the auditor there, went into the house, showed him the home office. He looked around for about 30 seconds and exited. And that was it. They allowed the home office deduction. We won. It's just one of those things that, here's the funny thing on this case. This case, we had about $350,000 of depreciation deduction. Well, for the vehicles purchased. So I sent over the vehicles, the purchase agreements for those vehicles I bought, and the auditor disallowed all the depreciation because they were, the document said the vehicles were leased, not purchased. But it was a dollar buyout lease, which essentially is a capital lease, and we know we can depreciate, not an operational lease. The auditor didn't know the difference when a lease should be really capitalized. So John, even though they technically leased the vehicles, it helped with their financing. There's a dollar buyout at the end of the vehicle. So essentially you bought the vehicle and you set it up for depreciation. And we won. But the thing is, like Andrew said, you've got to first assess. Everyone thinks like, oh yeah, get a rookie auditor so you could take him to school. You actually want someone that's experienced and knows the ins and outs and how the system works. Because a lot of these rookie auditors, they're trying to make a name for themselves. They're trying to, put some skins on the board, and they don't know.
Well, it's kind of like in my experience with the rookie auditors, for the most part, not all of them, but most of them, they're going black and white by the book, right? If they're green, to the government, maybe they have a little bit of experience in, from public accounting, maybe they don't, but essentially, like I had one and she was green and I already knew she was green. And she was a rookie and she was just straight black and white by the book, man, like freaking, it's just like no receipt, no deduction. I'm like, whoa, we're dealing with a multi-year exam here. You want receipts for every single thing like it was a contract, right? You're talking about invoices for materials and this and that. Some from, big vendors and, the companies that you order from all the time where you have an account on, others from like Lowe's and Home Depot and stuff like that. And then you're talking about multi-vehicles on the road every day. And come on, like, the reality is, like, it was just crazy to think that, first of all, the amount of time that she and I would put into the case to go through and substantiate, because all it was a substantiation case, to go through and substantiate every single thing was just like, it was just ridiculous. I mean, we would have been working on this damn case forever. And so I put some stuff together. We reconstructed. It was manual records. We literally spent in my office weeks reconstructing, a QuickBooks file. We actually had, at that point, going into exam, formal books and records, try to tie into most of what the taxpayer had to prepare in return, because it was a client that came over and got referred, right? It was a big project. And so I gave her QuickBooks, reports and sub-reports. And she's like, yeah, she goes, do you have receipts for all this stuff? I said, the taxpayer probably has for the majority of most of the main expenses, and probably not everything. And she's like, well, I need you to go through. And she goes and staple copies of all the receipts. She goes to all these sub-reports, tie into every single number. I'm like, that's not my job. I was like, that's your job. My job is to provide the documentation. Your job is to, analyze it and do whatever you want with it afterwards, right? So, it's like, always know, man, that, if you are representing a taxpayer, our job is to provide the information. The government's job, if they want to take a year and sit there and tie it all in or whatever, that's fine and dandy. But my job wasn't to do her job, essentially. So I told her, and I was like, this is just not going to end well. And so we met a couple times, and then finally I was like, listen, we're not going to get anywhere here with the, be respectful and agree to disagree. I was like, just close this out as I'm agreed upon, and we'll take our chances at appeals. And she's like, hey, okay. I'm like, yeah, hey, okay too, because we had a hell of a lot better chance at appeals. And we did, it's just the appeals officer was much easier to work with, especially with as organized as we were on our end. But dude, you get all kinds of stuff out there. At the end of the day, I much prefer an experienced agent, even if I feel that experienced agent knows much more than me as far as the law. They're going to be easier to work with. They'll cut you a break here and there much more than someone who's rookie, in my opinion.
Hey, Andrew, I probably shouldn't put you on the spot with some of these questions, but have you had any instances where you had married taxpayers where one of the spouses is kind of getting audited, maybe one of the spouses is in activities that even their spouse doesn't know about, and they get an audit? Now, I'm not saying in a nefarious way, but let's say they sold a bunch of stocks, or they had a rental property that no one knew about, and then you're playing marriage counselor.
Ooh, this is getting saucy.
I had everything always good. I try to steer the ship in the right way. Now, I've had plenty where clients are going through divorces, and those get very sticky, of course, right? You got to be very careful on that front. When clients are going through divorce, especially if they choose to file marriage separate, you got conflict of interest and things like that. But no, I haven't had any get to the point where they got examined. It's just like there's certain things I try to kind of steer away from it as best as possible if I can. It's just, you can just see the can of worms on some of the stuff that we deal with. It's just crazy.
Go ahead.
Oh no, I was going to say too, back to the story and really as far as for avoidance maybe from some of these horror stories. So what are, we'll use the example of receipts, right? So obviously now in more of a world of technology, we don't get receipts for a lot of stuff. So does the IRS kind of take that into account when asking for those things, or really what you had mentioned too, it's kind of at the discretion, at the judgment of the revenue officer expected?
I think it's really a lot of the stuff we deal with. The law says black and white, you got to have receipts, right? At the end of the day, a lot of it's going to depend on the revenue agent and their discretion. They all have discretion, even if they tell you that they don't, right? It's just, so, sometimes it's just kind of, like I say, using some common sense and logic. We do deal with digital. So these days, this is the new world. So, instead of keeping paper receipts, even if it's paper receipts, I tell clients all the time, listen, taxpayers, it's just like, maybe spend once a week or once a month and scan everything in, save it on your computer, back it up to the cloud, and that way you have a digital copy of it. There's nothing wrong with that. The law doesn't tell us you have to have a paper receipt. The law just says we have to have documentation and substantiation for what we deduct on a return. The bad challenge is with the clients Chris and I usually deal with for the most part, is most of them are small business, self-employed type of people where there's just a lot of volume, a lot of activity, and they're challenged for time, right? It's just they're trying to run a small business. The last thing on their list is accounting, taxes, record keeping. Unfortunately, that's the real world we live in.
And don't put thermal paper out in the sunlight.
Exactly.
That's their sake.
Well,
I only do so much to advise and tell clients, what they should do. Do they all listen? Man, that's probably our pet peeve in life.
Yeah, I think that the digital side, we have Reps Trackers, one of our sponsors here with the Teaching Tax Flow podcast. Keep track of your real estate professional hours. So you've got apps to keep track of your mileage. You can QuickBooks Online. You can pretty much digital capture all your receipts. I just have for me, I like to get my stuff emailed to me. I have an inbox in my for receipts and try to digital capture. So I think that, I have one more situation. I had a client, very benevolent man, and this is one that Andrew helped guide me on, had a significant amount. Yeah, significant amount. And there's one that I'll never speak of, but this one I'll speak of. But had a significant amount of income, over $1 million, man of great faith, donated about 10% of that income to churches and nonprofits. Looked like over $100,000 of tithes and charitable donations. Looked a little funny, so he got targeted for an audit. And they were only auditing that; they weren't auditing other things. I think they audited. Gosh, I don't even think they audited much other than that. I created a work paper. It was a weird situation where we had a business. And he double deducted a couple of these expenses because he wrote it off through his business, which came through on a K-1, just as a K-1 item. But he also gave that to us when we did the tax return. The bottom line is he overstated his deductions by about $10,000. I even calculated that for the auditor. It wasn't that much work, and said, look, I'm going to tell you right now, here's the adjustment. It's $10,000. These got double deducted. Here's all the expenses. She had the audacity, in my opinion, to disallow every deduction and tell me, you know what, you go back and you go prove that all these are 501c3 or church organizations, even though we gave her the receipts, okay, statements from, and she was a new auditor, and I just said, nope, it's unagreed upon. Now, Andrew is back coaching me. Thank you. I wrote a letter that Andrew looked at for me. Thank you. So we'll get you Andrew's contact information after. But anyway, I said, no, I disagree. Manager stepped in, couple calls with the manager, resubmit the documents. They agreed on the $10,000 adjustment. Client was happy. But again, think about it was still stressful for the client. The man was a very benevolent man. Did he overstate his donations? It was an innocent mistake. And it got resolved. But if he didn't have someone representing himself, he could have gotten all that thrown away, and it would have been a bad situation. So,
well, that and in a situation like that, I think, Chris, that I sort of remember that case that you were working on and we discussed. But you're also trying to minimize risk in a sense where, a lot of times what we see is if they find something, and it's sort of meaningful to the government, that if they can open up a second year and make it a multi-year, then that just gives them ammunition, right? So, I think back then, Chris and I were strategizing, probably sat down, had a beer or whatever, and sort of strategizing. And that was kind of the concerns, like, all right, how do we protect the taxpayer from this becoming a multi-year issue, a multi-year problem, right? And so, because we didn't know, and Chris didn't know probably at that time, if maybe he had accidentally overstated in the previous year doing his math and computations and keeping the same weight potentially, right? And then there's always an element of risk for many other things when you're under exam, right? It starts with one thing, it can go into some tangent and go into a completely different direction, when you're not expecting it as a tax pro.
Yeah, I mean, exactly. They in this particular case, there were a lot of other gaps that could have been addressed that did not get addressed. So,
I think, Chris, we discussed what the other potential issues were. We're like, got to do some damage control here and get this closed out. And it's sort of, strategy was back then. Again, it was over, some beer and dinner or whatever. But hey, sometimes that's when you do your best work. When you have a clear mind, then you come up with a strategy, discussing with one of your colleagues, one of your friends. Who also has some experience potentially, and stuff like this. And you come up with a strategy, and our strategy was like, hey, we need to close this out. And I told Chris, man, I said, you got some other potential issues, right? So do this, and this, and if it works, you're gonna get it closed out. If it doesn't work, then just force the agent to close it out as unagreed upon, because then you're containing the appeals case to just these certain issues. They can't go and start digging into anything else. And that was the whole strategies, like, all right, how do we contain it to just this one issue? Because we knew he could win that one issue, and certainly a skilled appeals officer would take this documentation and he'd give, pretty much a resolution in favor of the taxpayer. So you got to sort of be able to navigate the process, and think, just be level-headed, whether it's your own return, you're representing the set or someone else's plan, you just got to be cool, level-headed, because our clients most of the time get emotional. When there's a letter that comes in or an audit, they get emotional, they get stressed, they start panicking, and even if it's our own return, we got to be the voice of reason and keep everything calm so they can be able to listen to us, and we got to be able to moderate the whole situation from start to finish.
Absolutely. And Johnny T's going to hit. If Johnny T's going to wrap us up, but I'm going to tell you guys, Andrew's information is going to be in the show notes. He has been on every major national news channel. Puts out a lot of great content. He's the go-to guy in Atlanta, Georgia, for all the local news when any tax law changes, but also speaks on ways to prevent the audit in the first place, record keeping, being organized, and that sort of stuff. So,
Mike, I'm glad that none of those war stories were about me.
You don't know. I didn't say name.
We can throw your name in if you want. That's not an issue. If you're looking for
Actually, I've got one for you.
We can come up with all kinds of stuff.
Wait a second
It's
here.
funny talking about the record keeping. I'm thinking like, man, when did I actually scan some? Yeah, okay. And the thermal paper one has happened to me more often than not, where, you take it, you put it up on the dash, for a parking receipt, and then it's gone.
Look at it 9 months later, and you're like, I can't even know which is this from Lowe's, Home Depot, or Mickey D's, right?
Right. And of course, the sun hits it, right at the top where it tells you where it's from. You're like, how am I going to identify store number 72573? And I have no idea where it was from.
Try being in our shoes and having to give something like that to a revenue agent, that's what you're going to get.
That's when you just fold it over and say, it got cut off. I don't know what to tell you. But Andrew, thank you so much for joining us back here again too on the podcast. It's always great having you and Chris here. I mean, I'm the only thing I could bring to the table, all joking aside, except for this one, is hair. You guys bring the brains, I bring the hair. But thank you for taking the time, carving out. We look forward to doing this again. I'm sure we can go into some more specifics on all kinds of stuff. But before we do that too, and we'll put in the show notes, what's the best way anybody could get a hold of you if they had any specific questions that you'd be the right person for?
They can check out the website. There's an email that you can email over, a phone number, of course, on the website, which is poulosaccounting.com, POULOS accounting.com. So it's fairly simple. If anyone has any issues, pretty much any problems, wants to bounce off any ideas, just feel free to shoot me a call or an email.
Awesome, boys. Well, I appreciate it as always again. And for everybody that's not familiar with the podcast, if you're just listening to this one for your first episode, be sure to go back a little bit, listen to that one that we talked about, good old Darth Vader, aka the IRS, that we did with Andrew as well. So be sure to check that out. But until then, we will see everybody next week. Hey everybody, thank you again for sticking with us on this episode. Hopefully you enjoyed it. Hopefully you got some laughs in there. Nothing's more entertaining for me than moderating a conversation between two tax guys and two bald guys. So it's great because I can record this without getting smacked by either one of them. So I hide behind the microphone on this one. But honestly, thank you for joining us. Any questions you may have for Andrew, Chris, anybody from the TTF team, please feel free to reach out. As always, reach out on Facebook, LinkedIn, any of the social platforms that we are active on. At hello@teachingtaxflow.com is a good email address. Drop us a line. We'd love to hear from you.
The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum. The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer.